Hey everyone, it is Julie here with TipRanks. In today's video, we're taking a look at two stocks that both have a buy rating from some of TipRanks' top analysts who have assigned price targets that would represent over a 70% upside potential. So in today's video, we're going to take a closer look at these two companies and what has these top analysts feeling so bullish. Just before we get into those two stocks, this is your friendly reminder that if you enjoyed today's video, please make sure you hit that thumbs up button and leave your thoughts in the comments down below. I always love hearing from you guys. Please keep in mind that these videos are never a suggestion to buy or sell any specific stock and are just meant as information and entertainment purposes. Always make sure you do your own research and due diligence before making any investment decision. Now, with that being said, let's get right into these stocks, starting off with Daseke Incorporated. They trade under the ticker DSKE and currently priced at $5.82 per share. On the TipRanks top smart score, they come in with a 10 out of 10. This outperform rating comes in based on very bullish news sentiment, bullish blogger opinions, and positive technicals. Daseke is the largest flatbed and specialized transportation and logistics company in North America. Daseke boasts of having 6,000 tractors, 13,000 flatbeds and other trailers, and over 1 million square feet of industrial warehouse space. Through their subsidiaries, they consolidate transport operations across all of North America. They are a top 15 truckload carrier with 90% of their business direct with their customer. Their top 10 customers in the fiscal year of 2020 represented 32% of their revenue and had an average of an over 20-plus year relationship. Some of these relationships include the Department of Defense, Boeing, and CAT. Daseke recently released their first quarter earnings report. Their revenue came in just over $339 million, with cash flow from operations being $29.5 million and free cash flow totaling $34.4 million. Their net debt of about $487 million was down 17% year over year. Back in March, they announced that their board of directors has approved a new share repurchase program, allowing Daseke to repurchase 3 million of their outstanding shares. The Daseke stock does just have 3 analyst ratings currently, but they all come in as a buy. And with an average price target of $9.50, that would be a 63% growth potential from current prices. One of those analysts is Jason Seidel from Cohen & Co., who is rated number 2 out of all TipRanks analysts. He says that he views the sell-off in shares as overdone and believes that investors are not giving Daseke credit for the wind energy anomaly in 2020 that will not repeat in 2021 as management previously laid out. Additionally, a clear comp for Daseke is difficult given their specialty trucking operations that is contract-driven in nature. While this could cause investors to look at others in the trucking space who can better capitalize on current spot trends, we would point out that Daseke is likely in the best position to benefit from a large infrastructure bill. His price target of $10 for the Daseke stock would represent a 71% upside potential. For our second stock today, we're looking at Sandstorm Gold. Trading under the ticker SAND or SAND, they're currently priced at $8.04 per share. On the TipRanks Smart Score, they do come in with a neutral rating with very positive TipRanks investor sentiment, very bullish news sentiment, but some insiders selling shares within the last 3 months. Now, Sandstorm is in the gold mining sector, but doesn't actually mine gold themselves. Instead, the Vancouver-based company operates on gold royalties. They hold a portfolio of 200 royalties on mines around the world. They don't operate the mines, limiting their exposure to common operational risks. Their stringent due diligence process allows them to select some of the best mines in the world, providing stable cash flow and more exploration upside than any other gold royalty company. So how exactly does a gold royalty work? Well, mining is a high overhead business, so Sandstorm provides the upfront capital that miners need to get their operations running. In return, Sandstorm owns royalty rights, a percentage of their profits for the mine's lifetime. So Sandstorm acts as the middleman between investors and the gold mines. The active gold mines in Sandstorm's portfolio produced over 17,000 troy ounces of gold equivalent in the first quarter of 2021. That production gave Sandstorm a record revenue of $31 million in their first quarter, which was a 45% growth year over year. The company's operating cash flow in the quarter of $23 million was also a record and was up 59% year over year. And they also reported a sound balance sheet in the first quarter with $140 million in cash, $52 million in equity and debt investments, and $225 million available in an undrawn credit facility. Their earnings in the first quarter at 3 cents per share were far better than the 6-cent loss posted 1 year ago. The Sandstorm Gold stock currently has 6 analyst ratings, and it comes in as a moderate buy based on 4 buy ratings and 2 holds. The average price target of $10.80 would be a 34% growth potential. Looking at the most recent ratings within the last couple of weeks, analysts are a bit split. We have a hold rating that has a slight downside potential, a couple ratings coming in between 12 to 33% upside, and our highest rating comes from Heiko Ihle from H.C. Wainwright. Now, Heiko is a 5-star rated analyst and comes in as number 3 out of all of TipRanks analysts. In regards to Sandstorm Gold, he said that the 45% year-over-year growth in revenue is largely attributable to the Yamana silver stream, as the average realized selling price of silver increased 40% year-over-year. Notably, the average realized gold price per attributable GEO sold grew 12% year-over-year, which meaningfully bolstered overall revenues. We expect Sandstorm to build on the positive quarter going forward because precious metal prices remain strong. His price target of $14.75 per share would be growth potential of 83% from the current prices. So there are 2 stocks with buy ratings from some of TipRanks' top analysts, both with some pretty attractive price targets there. Of course, I always love hearing from you guys, so let me know your thoughts on these 2 in the comments down below. And don't forget to check out the Top Experts page on TipRanks.com to see what other top-ranked analysts are recommending. If you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Don't forget to tune in tomorrow morning for my pre-market morning update, where we'll get you up to speed with everything you need to know before the market opens. Thank you guys so much for watching. I hope you have a wonderful day, and we will see you back here next time.